So that's a quick snapshot of how we get up and running for this Friday to cap off what has been a bumpy, pretty tough and volatile week. Let's get to Kevin Green because we've got some data to get you across out from UMich. What's the consumer sentiment survey telling us today, KG?
Yes, and we are seeing a little bit of improvement here when you're looking at this number. We actually had consumer sentiment coming in at 51 even. The street was looking for 50.3. That's lower than what we saw previously at 53.6, but once again, better than the street's expectations. Current conditions coming in at 51.1. That did actually miss the street's expectations of 52.3. And then consumer expectations coming in at 51 even. Street was looking for 49, so better than expected there. If you're looking at the one-year inflation expectations, we did actually see that coming in a little bit lower. Now it's readjusted to 4.5%. Street was looking for 4.7%. Previously was at 4.6% here. So I would say better than expected in some respects when it comes to the University of Michigan consumer sentiment. And I think the biggest headwind that you have is the inflation expectations. But if that starts to move a little bit lower, maybe that's a sign that consumers are a little bit more optimistic, as well as maybe prices themselves are actually going a little bit lower. We'll see if that's going to be reflected in the government data over the next couple of days here. But overall, better than expected report, I would say, in some pockets there.
It's a good sign and certainly an encouraging report, particularly because 2 weeks ago we were talking about how we had seen some degree of deterioration in how people were feeling about the economy, given both sides of the mandate and giving sort of equal weighting to both jobs and also price increases here. So hopefully this is a positive trend that we'll continue to keep an eye on. We also got S&P Global Flash PMI out this morning. I've seen a level of 55 for services, 51.9 on manufacturing. What is that telling us?
So manufacturing continues to be a little bit weak. It's better than than being in contractionary territory, but that continues to see maybe some gyration when it comes to that data set. And it's only around 30% of the overall economy. We know that the industrial side of the economy has been contracting for a very long time, almost 2 years at this point in time. So once again, not a really big surprise when you're looking at that number. When you're looking at services, 55 coming in with that number at 55. Street was looking for 54.6, better than the street's expectations, better than what we saw for last month as well. And if you're looking at the total composite number, better than the street's expectations, coming in at 54.8. Street was looking for 54.5 here. Now, if you're kind of looking at some of the internals of this data, what's actually very interesting, new orders actually spiked pretty aggressively. It's the largest rise that we've seen since 2024. So that's something to note. Maybe demand is actually starting to spark a little bit here. But when you are looking at prices or input prices, they continue to go up. So it's still saying that tariff policy, as well as maybe some other factors, supply chains, logistics, and things of that nature, are still impacting prices, and that could actually flow to the consumer. But this is not that big of a weighting when you're looking at this particular data set. The ISM manufacturing and ISM services has a little bit more weighting when it comes to market trading and activity. But for the most part, I would say S&P global numbers mixed to slightly better. You don't like to see those price components continue to rise, though.
Okay, I'm just seeing across the commodity space, we've got a few commodities under pressure this morning. I'm just seeing oil is at 57 bucks a barrel. I'm looking across silver also on the back foot. We've dipped below that 50 mark too. But I do just want to pick your brains, KG, about what we're seeing in lithium. I noticed a number of names in that space had been down this morning. And some people pointing to some reports around Contemporary Amperex, which is the big Chinese battery maker, which very much dominates in this space, actually looking to reopen a mine over in China. Just wondering how much of that is sort of feeding into what we're seeing as far as the price action and just how significant that could be.
Yeah, that could be actually very significant. This mine actually comprises of around 3% of total global supply. So if we are going to see this mine reopening, obviously supply hitting the market should push prices lower. Now, what's interesting, this mine actually was not shut down because of something catastrophic happening or this mine failing. They just were unable to get a continuation of their permit from the Chinese government here. But it does appear that might be softening. We might be seeing a little bit of a readjustment there. And they are letting their peers know, letting their downstream players and components know to be ready that this mine's going to open up. So they're getting the chemicals, they're getting the labor together, and this might also, once again, kind of freeze up some of that supply or ease up on some of that supply constraints that we've seen here in the market. And this also could be something that does flow to the United States. So positive signs here. We have seen lithium aggressively move to the upside over the last couple of weeks here. Maybe this is going to be a change in dynamics, but when you're looking at the overall commodity space, a lot of different narratives and different pockets of the market really driving price prices. So we're not seeing a rising tides lift all boats when it comes to commodities. Each and every one of them have their own different narrative that is taking place. And from the metal standpoint, and when you're looking at lithium and other critical minerals, right now they are in supply constraint, type of factors right now, which are keeping these prices a little bit elevated.
Yeah, and just very quickly, I mean, as far as oil prices extending these declines now, I've seen the energy stocks are on the way lower as well. Can you sort of talk us through what's behind that move?
Yes, so the United States proposed a deal between Ukraine and Russia, and it does appear that President Zelensky of Ukraine is open to negotiating or finalizing a deal. It doesn't seem like the one that was proposed is going to be the final one, but it does appear that he is open to having these discussions, which is why we are seeing oil move a little bit lower. We will see the details once the deal is signed. We have seen this in the past over the last year and a half, 2 years, that maybe we could actually come to some form of an agreement, and at the end of the day, we actually do see the escalation actually ratcheting up here. But this is just once again one of those geopolitical risk factors that are taken off the table here when it comes to the oil markets. You are seeing it pull back here a little bit, but we have seen buyers in the past stepping in around this $57 level. Let's see if that's going to occur this time around as well.
Okay, keeping an eye on the oil patch. Thanks so much for that, KG, getting us across those key stories that we're watching this morning with the data and the commodities.